Hi guys, this is Mark Shaw's the Pattern Trader. Every week I literally sift through hundreds of price charts looking for that one opportunity that literally leaps out at me. And a couple weeks ago I found just that opportunity when I was looking at this chart of the very small obscure company called Ktus Security and Defense. The ticker symbol is KTOS. Now, what leapt out at me was not only the integrity of the chart pattern of Ktus, but how eerily similar the chart pattern in Ktus was to that of spot silver, ticker symbol XAG Now, in a moment, I'm going to go to the real-time charts and show you this comparison between silver and the price charts of KTOS and see if you can see the same thing that I did. Now, a couple of weeks ago, Ktus went to a new high around $30 and then crashed to about $26. But to my mind, this mini crash was a huge opportunity because of what I thought was an enormous bullish underlying governing price pattern. And so instead of buying the stocks, I bought the call options of KTOS, the 32.5. Now, the great thing about this call option was that typically when I buy options, the more time you go out, the more expensive they get. So typically I only go about a week out ahead, and then it becomes a real gamble if the stock can catch up to the price of your option before it expires. But the unique feature of the option in KTOS was that it expires on March 19th. So when I started buying the call options when the stock was around $27, $28, the call options were expiring on March 19th, which meant that I had about 7 weeks to see what this stock was going to do. And again, by virtue of the underlying very bullish price pattern, I thought that I had a very good chance that over the course of 7 weeks that I was going to get a bump in the price of my call options. And that's exactly what happened. I started buying these call options for about $1.10, $1.20. Again, it was the 32.5 strike price expiring March 19th. Now, because of the huge move that KTOS put on last week, the stock now is sitting at an all-time high and it closed at 32.89, which means that I'm just a smidgen in the money. Remember, I bought the 32.5 calls, and now with the stock trading at 32.89, it's above my strike price, and so we call that in the money. And so now each dollar that this stock moves up, it'll go dollar for dollar, which means that I will double my money. Remember, I paid about $1.10, so every dollar that this stock goes up now, I will effectively double my money. So now I'm going to go to the real-time charts and show you why I was so excited, why I decided to take such a gamble. Although, frankly, with the time I had on the call series as well as the price action, I didn't think this was such a gamble.
This is the price chart of XAG This is the ticker symbol for spot silver. This is a weekly chart. And what I want to point out is how eerily similar this chart is to the stock chart that I'm going to show you in just a few moments. So you can see with the price of silver, many years ago, we had this double top, and then we had this descending triangle, both of which are very bear price patterns. Once silver crashed through the neckline of this double top descending triangle, you can see for many years thereafter, from $26 to $11, the prices just crashed. And then in the more recent time frame, you can see that silver turned around and put on this inverted head and shoulders price pattern. Now, inverted head and shoulders is an upside down version of a head and shoulders price pattern. This is the left shoulder, this would be the head, and this would be the right shoulder. And when you cut through here, this is called the neckline, which is simply the line that crosses through the entirety of the chart. And that represents a breakout, a bullish breakout of this instrument, no matter what you're looking at. And I think what this side-by-side comparison reveals that price analysis, chart analysis, price action can be applied to almost any instrument that has a high, low, and close. I don't care if you're trading pork bellies, corn, soybeans, orange juice futures, IBM, spot silver, or in a moment I'll show you the stock of KTOS. Now I'm looking at the price chart of the stock KTOS, the company's Ktus Security and Defense. And I want to see if you see the same similarities that I saw in KTOS, where we have the double top, then we have the descending triangle. Thereafter, the stock languished, dropped from $50 all the way to $5 over a period of 10, 12 years. And now we see the same kind of turnaround that we saw in the price of spot silver in the form of this inverted head and shoulders price pattern. So you can see when we cut through about the $22 price area, this effectively confirmed that this was a reversal price pattern. This inverted head and shoulders was reversing the long-term downtrend, and now it looks like the stock has got new life to the upside. What you'll also notice on the close last week is that KTUS closed on a multi-year high at 32.89. Now you can see in the week prior, KTOS went to the price of about $30, and then by the end of the week, it crashed to about $26. And to my mind, this was the governing price pattern, this inverted head and shoulders, which means that this was a bullish price pattern and that the trajectory of this should go higher over time. So with this mini key reversal where the stock dropped from $30 to $26, I used that as an opportunity and ended up buying the call options at 32.5. Now remember, when I was buying the call options, I was out of the money. The stock was around $27, $28, and that meant that the stock would have had to go up $4.50 just for me to be in the money. And as you can see, that's exactly what it did last week. And now I'm slightly in the money. And now every dollar that this advances, I will effectively make 100% on my money, as I paid $1.10 for each call option, strike price 32.5. So for every dollar that this advances above $33 or above $32.5, I will effectively go dollar for dollar. And the great news is I have until March 19th, almost more than a month from now, to see what this stock is going to do. And by virtue of it closing at an all-time multi-year high, I'm pretty excited for the prospects. Also, the company announces earnings on the 22nd of February. Now, earnings typically, are a catalyst one way or another for the stock to move. Now, by virtue of the underlying reversal price pattern and the momentum in the stock, I do believe that the earnings will be a catalyst to shoot this stock higher.
So if you would like to understand more about how I capitalize on these monster moves using only price patterns and price action, then I highly suggest that you sign up and register for my 4-part live series each day next week, Tuesday through Friday at 4 p.m. Eastern Time, where I'll be going into the markets live and showing you how I basically analyze trades, how I analyze high value risk reward opportunities, and also why I reject trades. So I'm really pumped. I'm really excited about this. We literally had thousands of people on the last webinar. So if you'd like to understand how I find stocks like KTOS and make huge dollars on them, then go ahead and sign up for the webinar, and I'll see you at 4 p.m. Eastern Standard Time, Tuesday through Friday next week. With that said, I wish you guys a healthy and prosperous trading week, and I will see you next time.